Now, Australia's economy is growing at the fastest pace in almost 2 years. GDP rose by nearly 1% in the final quarter of last year. Breaking it down for you, spending on machinery and equipment surged almost 11%, a rise which accounted for almost the entire overall growth in the economy. On an annual basis, the country grew 2.7%. Now, the acceleration vindicates the Reserve Bank of Australia's decision yesterday to raise interest rates for the fourth time in 5 meetings. Most economists say that rate hikes are going to continue, with a further increase coming in May, as the central bank predicts economic growth of 3.25% by the end of the year. Well, let's get some reaction and cross over to Sydney, where I'm joined by Moody's analytics economist Matthew Circosta. So good morning to you, Matthew. These growth figures were as expected, but if you have a look at a lot of the recent data coming out of Australia, it really does look very good. It looks like this economy is firing on all cylinders and doing better than most in the world. Is it really that rosy?
Yeah, indeed it was. That GDP growth figure today was the fastest rate of growth in 2 years, and it was largely attributed to 3 factors. Private investment surged in the quarter as firms ramp up capacity to meet demand for resources from China. We've also seen a strong increase in government expenditure, and that's basically due to more of the fiscal stimulus coming on stream, and that's propped up the economy all year and will continue to do so going forward. We've also seen consumers shrug off 3 interest rate rises last year, and they spent more during the fourth quarter. So all these conditions propped up growth in the fourth quarter and will boost growth going forward.
So Australian growth is pretty good, but it's still no China. So if you look at the RBA and you consider that they've raised rates 4 times recently, it still looks like a pretty radical strategy compared to most other major central banks.
Yeah, the Reserve Bank raised the interest rate yesterday to 4%, but it's still low on historical terms. We expect the Reserve Bank to continue raising the cash rate. The governor recently said that a neutral rate or average rates more like between 4.25% and 4.75%. So the prospect of further rate hikes this year are quite possible.
Okay.
But the Australian economy has performed well regardless.
Well, on that topic, Matthew, strategists at ING over in Sydney say that traders are wrong in their predictions that interest rates will go to 4.75% by the end of the year, and that would be some sort of conclusion. Yeah. They say 5.25% at least is coming. Wow. And what's your view on that?
Yeah, we think that the Reserve Bank will get to that neutral level of 4.75%. And then pause to see the impact that the rate rises have had, because they clearly haven't impacted on consumers thus far, who continue to spend. Retail figures were really strong in January. The real impact it has had has been on the housing sector. We saw building approvals slump in January. So, no, we're waiting for further confirmation before upgrading our interest rate forecast. But 4.75% seems to be the rate where the RBA will sit, and then just wait and see how the economy is performing.
Quickly, Matthew, what are the risks here for the Australian economy?
Well, the risks are definitely inflation. Inflation sits uncomfortably high, above the central bank's target range. So the prospect of sharper interest rate rises like the ING are forecasting is quite a possibility. Right. Also, any slowdown in demand from China would seriously weigh on Australia's export sector going forward.
Matthew Circosta there for us in Sydney. Thanks so much for joining us.